So welcome to the Chart of Life. In today's video, I'm going to show you two trades I took and explain exactly how I use my own trading technique, something I call momentum alignment strategy, or just M.A.S. It's a strategy I developed myself over time based on what really works for me, combining structure, momentum, and confirmation across multiple time frames. The idea is simple. I only take a trade when the momentum and structure are aligned. That's what keeps me patient, consistent, and confident in my setups. So let's jump right into it, guys. First of all, I'm going to explain to you how my M.A.S. strategy actually works. So basically, I'm just using channels. I'm not using indicators. I just opened my calendar and I see if there's any important statements that day, like CPI data, like interest rates or something like that, unemployment claims and something like that. These are important numbers which oftentimes will make something in the market, but beyond that I don't watch any news. I don't use fancy indicators. I don't use RSI. I don't use MACD. I just use pure price action actually. Okay, so the first thing I do, I draw my white channel. My white channel is my main channel. I use 5 channels in total: white, red, orange, yellow, and green. And I only trade in the green one. Okay, so if I'm not able to draw all those channels, it tells me that market doesn't move the way I want, the way I need to trade good setups, you know, because sometimes we are in choppy sideways moves. Sometimes the market just doesn't gives us nice opportunities to trade. And if I'm not able to draw all my 5 channels, it's a big indicator for me to just don't trade, or to be, and just to be careful, you know. So the first thing I do, if we say that's the price, I draw my main channel, my white channel, right? Then I go down in time frame and I draw my red channel like this. Then I go even more down and draw my orange channel, something like this. Okay. Then I go down in time frame and draw my yellow channel, something like this. And when I'm in the 1 minute time frame, I make something like this, right? So drawing my green channel in the 1 hour, in the 1 minute time frame. Sorry for that, because I just only trade in the 1 minute time frame in the green one, and that's basically the way I go every day. Like, I start in the 1 hour time frame. I draw my main channel, which basically remains the same for weeks. Okay, because it's just the 1 hour time frame. Even the red channel remains the same for like weeks. The green, yellow ones, they change like every day. Okay, because, you know, market it's just moving. So that's what I do, okay, every day. Before I just even think about taking a trade, I just draw my 5 channels, and only if I have them, I can possibly think about entering in some position, in some trades. So now I'll show you an actual example, an actual trade I took the 7th of October. And I'm going to show you in this example how I use my momentum alignment strategy. So let's do this. So that's Ethereum, the 7th of October, when I entered this trade. And what did I do? I just explained to you, right? I just draw my white channel, which is the main direction, the main channel, and it starts like in April. So it's a long time. So this channel probably will not move the next few weeks. And I draw my white channel, I draw my red channel, I even draw my orange channel without going down in time frame, because they are really obvious, right? And by the way, I'm using the 2 hour time frame only because I Otherwise, I can't fit the whole movement into my screen. I'm using my small MacBook, so I'm just not able to fit the whole movement into my screen. I don't go beyond the 1 hour time frame. There's just no need for it because I'm a day trader. I trade in the 1 minute time frame, and going beyond the 1 hour time frame, it's for me, it just doesn't make any sense. Okay, so I'm not going beyond the 1 hour time frame, and from the 1 hour time frame I move my way down to, from 1 hour I usually go to 30 or 15 minutes, then 10 or 5, and then basically in 1 minute time frame. Now we can go down in time frame. What did I do here? We saw in Ethereum that they price moving down pretty aggressively, I would say. We made something like a bearish flag, which broke down and made another low. And then we saw price moving up. Okay, we saw price moving up, but it's a kind of choppy. It's kind of choppy, you know. The price doesn't go up impulsively like it went down, right? So for me, this channel, this price moving up was kind of corrective. Okay, it wasn't impulsive. And then another thing I saw was this double top. Give me a second. I saw this double top, which oftentimes can be some sort of, you know, indication that price will not continue in this direction. So we had this channel, and since we was 3 p.m., which in my time zone is like right before US market open, I just be really careful round about that time. Basically, I just waited, and when the price finally broke, it didn't invalidate my strategy actually, because there's something called liquidity grab, which is a kind of a trap, you know. You have to think about this, okay? If I'm looking for a potential short move right here, and I see this double top, we have to think that other traders are also seeing this double top, and a lot of people are probably setting up some kind of short, maybe like something like here, and they are putting their stop loss right above this double top, right? So what does happen in these situations? Market makers, okay, people with a lot of money, they can see, you have just to look at the order book, right? You see this kind of liquidity zones. You can see all these stop losses above these two highs. So a lot of times what happens before a big move starts, something like a liquidity grab triggers all the stop losses up here. It basically takes all the liquidity big market makers need to open big positions, and then price moves down. I hope it makes sense what I said. So a lot of times I just wait for some kind of liquidity grab like that. And in this situation, I was kind of right. So I just waited. And after the price went down, we don't need this any longer. So after the price went down and came up, I just said, okay, we can go possibly short here. Why is that? Because after this kind of fake out, after this liquidity grab, we went down pretty aggressively, okay? So now we moved up for a little bit. You can see down here in the volume decreases when price goes up. We see some kind of resistance at this channel top, and we see some nice wicks. Okay, that means that price goes up, but sellers are kind of strong, you know. So we are making this kind of consolidation, this kind of resistance zone in this fair value gap you can see right here. Okay, and what basically happens is we made our liquidity grab as a trap. a lot of stop losses was triggered. Then price came down aggressively. We left some fair value gap behind us. And what the price makes in situations like this, it just came back. It makes a resistance at this channel top. And that for me was my trigger, you know, my signal to go short, which I did to go just a few candles. It was easily here when I went short, because I saw basically another wick. I saw a strong candle coming down with volume increasing. So I went short right here. And now I'm gonna show you what happened next. The price basically went down right to my take profit, which I positioned right down at the channel bottom. And it was like 5.5 risk factor, so it was a pretty nice trade in about 38 minutes. That's my average, by the way. Usually my trades took between 20 and 40 minutes, something like that. If I trade in the morning during London session, trades are just taking a little bit long because volatility is just not that high. So this is the second trade. I basically took my way from the 1 hour time frame to 1 minute time frame. Same thing, same channels, basically same charts. So the white channel is the same, the red channel is the same. The only one that changed actually was the orange one. Orange one, yellow one, and green one are changed, as you can see. And my thesis that they was like this. So we had a pretty nice move up, and then we are just kind of moving in a choppy consolidating way. So we left a huge fair value gap in a higher time frame. I don't remember if it was an hour time frame or 30 minutes, but we left this huge fair value gap. And I said, okay, probably if we break the channel, we can go down into the fair value gap, at least to the channel bottom, you know. So in the 1 minute time frame, I draw my green channel. So let's go deeper into the green channel. So first of all, we have here some kind of 1-2 setup. Okay, 1, 2, 3 down, called Elliott waves. We saw some kind of reaction at the 786 Fibonacci. But before I even talk about that, look at this price action. You basically see higher highs, but the higher highs become closer and closer in time, right? We had a higher high here, then one here, then one here, and then one here. That basically shows weakness. Okay, it shows weakness because price is willing to go up, but sellers are getting stronger and stronger. So after we made a perfect touch point at the 786 and we made this two beautiful bearish candles, I did go short right here. And now let's see what happened. So this was kind of frustrating and funny. First of all, the trade took like hours. I think 4 hours, something like that. But my overall thesis was right. Okay. I decided to set my take profit at the beginning of the fair value gap because I mean, it was like 9.3 risk factors and it's just a lot. Okay. I don't want to be greedy, you know, so I set my stop loss right here, and at the end I saw this bearish flag, which is kind of good for my trade. Probably will go down, which price actually did. We made another low, and after we made that low and I was so close to my take profit, I just set my stop loss above this last high, okay? Because I just don't want to take any risk. We are really close to my take profit. This is a bearish flag, which is kind of positive for my trade. So I just want to secure myself some risk factors, and I set my take profit right here. And now I'm showing you what's happened next. My stop loss was triggered, unfortunately. I made still 5.5 risk factors, I think, which was kind of nice. But it was the right decision to go out because the price just moved further up, as we can see. So that was the right decision to set my stop loss above this last high. And since the bearish flag didn't work out because we didn't see a lower low, it was kind of right to set my stop loss above this high. So I made like 5.5 risk factors, which is a lot, which is really good. This is kind of unfortunate, but yeah, it's part of the game, you know. Sometimes you got stopped out for a second. Sometimes you miss your take profit for a second, and other times the price just triggers your take profit and then moves up. So it's kind of statistic, you know, because what we are doing here in trading is just probabilities, is just statistic. Like our strategy doesn't work every day. It doesn't work every time. But if we have an edge, we can be profitable, because you know you have to think about it in this way. What I am risking in every trade is one risk factor. It doesn't matter if my stop loss is 0.41% big or 0.9%. My risk is always one risk factor. When I lose one risk factor every time. So, but when I win, you know, I can win 10 risk factors, 9, 8, 5, 3, okay? So if I lose like 7 trades out of 10, I lose 7 risk factors, okay? But the other 3 that I won, if I made like 4 risk factors for each trade, I'm at 12 risk factors. So I made 12, I lose 7, I'm profitable, right? And that's all about trading. It's not about being right all the time, because no one is right all the time. That's it for the video, guys. I don't know what you guys like, so I'm just trying to make some content for you and see what you guys like, what you guys don't like. If you want me to go deeper into trading, into my strategy, into risk management or other things, just tell me. Write me a comment. Give the video a thumbs up. Subscribe if you haven't. And I'll see you next time. God bless you.